Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. The S&P 500 climbed 0.4% to 5,936. We've got the Nasdaq Composite up 0.6% and the Dow higher by about 35 points, settling at 42,305. And chatting with us this morning is Jason Britton. He is the founder and CIO for Reflection Asset Management. Jason, good morning. How are you doing today?
Good morning, Ryan. I'm well. How are you?
I'm well as well, and looks like markets are doing not too bad if you look at May at least. So we've got this saying, sell in May and go away. It didn't really play out that way in the past month. S&P 500 up 6.2%. What do you take away from the performance in the past month?
So I think the performance in the past month has been the collective sigh of relief the American consumer and the world watches the Trump administration deal with tariffs and their on-again, off-again status. Sell in May and go away works in a normal marketing environment, not this year.
All right, so definitely a new normal of sorts and, of course, new territory for many things. So we've got tariffs in focus and, like you pointed out, back and forth. And with the latest around China, they are now talking about retaliating, and Europe as well, especially against the 50% tariffs on steel and aluminium. So where does it go from here? Are we looking at potentially another pullback?
So I think we're going to anxiously anticipate some of the additional numbers. I mean, we've got jobs numbers that are coming out on Friday here in the States. We really are looking for the other shoe to drop. I mean, between the back and forth of tariffs and the slowly eroding economic data, really is starting to become somewhat of a bleak picture.
Yeah, let's talk about the data we're expecting. So we've got a lot going on. The tariffs have seen many companies pull back on their projections as well as their guidance for the rest of the year. How much does that, do you think, weigh on them in terms of business planning, hiring, and so on?
I think it's an incredibly difficult market to be the CEO of a company these days. I mean, trying to forecast spending and hiring, et cetera, it's just really challenging. I mean, when you're talking about in the span of 2 weeks, your profit or cost margins moving 25 to 50%, I mean, it's impossible to hit a moving dartboard.
Yeah, the other factor, I suppose, is what's going on with the U.S. dollar. And we have seen quite a weakening of the greenback. In fact, Morgan Stanley is penciling in a 9% additional downside. What's it going to mean for the earnings season, at least in the coming quarters?
I think it's going to be really challenging in the coming quarters, and I also think that there are other pressures at bay. You just have seen the things that are happening at OPEC Plus around, continuously maintaining supply and what that's done to the price of crude. There's a lot of things that are moving against the economic environment today.
Yeah, let's talk about the price of crude. So you've got OPEC Plus talking about hiking supply. I imagine that's going to be good news, right? Because prices will go down for consumers.
So it will. At the pumps, Americans will pay less per gallon of gas this summer as they gas up and head to the beach, but they're going to have overall less money in their pocket to spend, broadly speaking, once you factor in the cost of tariffs and all of the other things that are going to get priced in, from everything on televisions at Best Buy to consumer goods at Walmart.
Okay, and let's talk about where we are right now when it comes to the consumer sentiment. We have been talking about how consumers have been rather resilient. Is that the picture you're getting as well?
So consumers have been resilient so far, but I think there is a point at which they will begin to break, and I'm worried that we're getting close to that. I mean, there's been so much negative news and so much back and forth on the economic data and where things are. I mean, the sentiment, right? The Michigan Sentiment Index just came out at a lower reading than people had expected. I think the reality is that the American consumer is continuing to spend in the absence of the data. Once that data starts to filter through and you really do see those prices come up at places like Walmart, et cetera, you're going to see a slowdown in spending, and I think you're going to end up with basically a self-fulfilling prophecy.
Yeah, it does look that way. If you see those numbers come in, you might start to think twice about what you're going to be splashing on in that sense. Okay, so taking a step back, what's your approach towards markets right now? You pointed out maybe we are at an inflection point for the consumer. Would that mean stay away from the consumer space when it comes to stocks?
So I think if you're an investor for the long term and you're currently invested in the market, you can probably just turn a blind eye and make the assumption that over the next 6 to 12 months, this is going to work itself out, and you'll probably be in the same or no worse off position than you are today. If you're a short-term trader, there's real opportunity here to buy on the dips and sell on the noise. If it's for your pension or your retirement account, I have tremendous sympathy for you, and I certainly hope that you're not living on a fixed income and that you need to pull this capital out in these days. I think the best thing to do is to be a little more conservative and hold on to a little more cash.
Yeah, there are a lot of concerns right now when it comes to what's playing out in the U.S. market, including concerns around the U.S. deficit. We've seen the ratings from S&P dropping it from AAA to AA1. What's your take on how the rest of the market is pricing in this so-called Sell America narrative?
So the Sell America narrative is really disconcerting from a global perspective. And watching Moody's be the last of the big three credit rating agencies to drop the AAA credit rating from the United States, while it was a long time overdue just because of the structure and all of the data behind it, it was a big mover on the sentiment side. I think the reality is that you're looking at a bond market in the United States that's potentially fractured. And when you've got, 4.5% to 5% on the 10-year and then all the way out to the 30-year, it remains a real challenge for the United States government to continue to borrow at the rate at which it's borrowing when its interest costs are going to rise that much.
Yep, thanks for the correction. It's Moody's, not S&P, which had the latest downgrade. All right, let's take a look at what are the defensive places people can maybe go towards in this time of uncertainty. And it looks like gold has been a popular option. We have seen gold actually outperforming equities in the past 2 years. What's your approach towards gold right now if the price is still on a tear?
So I think gold has done really well. But what's interesting is there's been a bit of a divergence between the gold miners and the actual gold stock itself. If you're looking at like an ETF, like a GLD or something else that trades in actual gold. So I would be long the physical commodity as an inflation hedge. But I also wouldn't look past some other alternate currencies, something like the Swiss franc. There are some real opportunities there as well, as it's not a world reserve currency and the fact that commodities aren't really priced in it, but it tends to hold its value in times of crisis.
How about the Japanese yen? Because we are looking at a bit of a divergence in that sense of central bank action in Japan as well.
So the yen trade and its unwinding really was the first shoe to drop about a year ago. If you look at sort of how the U.S. equity markets really kind of took on in the late summer, early fall of last year, some of that volatility around the technology names. The reality is that the central bank in Japan has always had challenges around stabilizing. They've had, roughly a decade plus of slow to no growth. They've had inflation. They've had challenges. I think they're poised and they're going to do well on a go-forward basis. But I think you have to pick your spots. I don't think it's just writ large anything Japanese will do well over the next 6 to 12 months. But I do think there's some shining stars.
All right, the Swiss franc could be a place to look for in terms of defensive places or place in the market right now. We've been in conversation with Jason Britton. He is the founder and CIO for Reflection Asset Management. Jason, thanks so much for your time and insights. It's been great chatting with you.
My pleasure, Ryan. Thank you so much.
We'll catch up again soon, Jason. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.